Discussing markets right now with a very special voice joining us today. Jain of IIFL Wealth is here with us. Anu, good afternoon. Thank you very much for joining us. It's been long that we chatted. How are you? First of all, I would like to understand how are IIFL Wealth clients in general right now. Were bulk of the big HNI clients you handle able to participate in this furious 2-week rally, or most of them missed it? And how's the positioning generally when you chat with them?
So, we are investment advisors. Most of the portfolios are geared for the long term. So while we had raised cash right in Jan, when remember we were talking last time, we were negative on the markets, and we are sitting on our model portfolio about 17% cash, but not that we participated in the rally up in a big way, because these are bear market rallies. They're extremely sharp. The risk on trade was internationally there, but we are not convinced that this rally is here to stay. We are cautious, especially at the level of 10,000 and above. We would be happy raising more cash. So I would say, no, we did not use this rally to buy anything into the market, but we remain cautiously invested in everything that's there in our model portfolio.
Let's talk about financials in your view. They are clearly on the receiving end as far as bears are concerned. Their most loved instrument to short. In fact, not only the trading community, but we also saw a lot of trimming in financials from the funds side as well in the last 3-4 months. And that was clearly visible on the charts as well. What are your thoughts on Bank Nifty? And if you could share your thoughts on, say, some of the big lenders, the more popular ones, Bajaj Finance and the likes. Any contra calls there?
Really, we don't have contra calls, because anybody who's a lender in this market, at least for the next 6 months, is going to face problems. And then whom are you lending it to? So whether it's the NBFCs, we've in fact done a report today which we've released, where we've spoken to people who are fleet operators and how they're facing problems and even to pay EMIs. So the problem runs deep into every sector where there is borrowing, and I think that's going to continue at least for another 2 quarters, if not more. So the view is a consensus view, and we are not giving a contra buy call. I think what you saw on the Bank Nifty was a drop right up to 17,300 odd levels, and a pick back right now in this rally until about 21,700. These current levels of 20,000, which we have just broken today, or we're just about those levels, this is 60% retracement from the bottom. Now, I think if you were to break 19,500, then you are back to those levels that you can go back to, closer to 17,500, 17,000, 18,000. I think pain is yet to come. This was a risk-on rally where people saw money coming back quickly, especially into the high beta banking stocks, which have kind of taken the brunt. But I think sanity will prevail over the next 2 quarters. I think there's still pain from these levels also, which you will see.
I know Reliance Industries chart is right now on the screen. In the 3 months gone by alone, almost 50% rally has set in. And now we all know fundamentally how the company is transforming and has almost become a magnet for large global marquee investors in terms of deals. But opinion is quite divided right now on Reliance stock. Some say the rally has been too furious and hence will fizzle out, and others say that it may have some more steam. What does the long-term charts tell you as far as Reliance is concerned right now?
Well, the chart formation is obviously extremely positive, given that this is a stock close to its 52-week high when the market is nowhere close to it. We all know the fundamentals for it, but does it kind of go on a tearing fire from here? Well, we've seen incrementally every deal not get the same kind of momentum that Facebook deal got for us. However, it's kind of maintained the stock in this range. What I can definitely see from the chart, it will be a relatively outperformer. So even if the markets were, say, as we're talking, that Bank Nifty would probably go back to similar levels or at least give a deep correction from here. So that will be a sector, or that will be one stock where you can see relative outperformance. By relative outperformance, I think there is a possibility if the markets really see a bad correction, this going back to 1380, probably 1400, which is still from the current 1580, 1590 levels. That's still about roughly a 10 to 12% correction. But if the market's giving you a 17-18% correction, this is giving you a 10 to 12% correction, it's a relatively outperforming space. So yes, it'll outperform. You can probably look at levels 1720, 1730 gets taken off, which could be anytime in the next 3 to 6 months. Then you can look for higher targets. But as of now, 1600 is going to pose to be a resistance. And since it's listed today, we should basically look out that this could very well be for the short term. And I mean, the immediate short term, it could be a top formation for, say, about 15-20 days.
Let's also talk about the pharma space. After almost 5 years of, bad patch, it is coming out now. Everybody wants to own pharma stocks. And in fact, stocks like Dr. Reddy's, Divi's already are fresh lifetime highs as well. What are your thoughts on pharma rally, and is it getting overowned, or do you see more, and if any, stocks which you like over there?
So fundamentally, if you go to see, most of them have rallied very, very furiously, right from a Dr. Reddy to, say, when, Sun Pharma from the bottom to Cadila. We feel that now at this level, the upside is limited. However, when the market goes into a phase where there is a risk-averse kind of an attitude, this is places to hide. And when it's a place to hide, people will hide irrespective of, what kind of levels it is at. So we do like Dr. Reddy, we like Cadila at this time. But I would probably, if I had to do fresh purchases, it would be, on a correction. It would be like a cash equivalent. So maybe if the market falls, these will not fall, or it will definitely be relative outperformance to a very large degree. But do I want to buy it at this high valuation? I would probably wait for at least a 5 to 10% correction before I kind of enter in. And we do like, Cadila out there. We have Sun Pharma and Dr. Reddy into our portfolios.
Right. What about the small cap and the mid cap end of the market, Anu? How are you analyzing the small cap, mid cap, the broader market, which completely fizzled off for almost 1.5 years? Is there some semblance of eagerness of value picking or some bottom fishing by some of the clients? What's their attitude towards small cap? It's a complete no-no yet, still bruised. Or you think there is some amount of, courage coming back to address that area?
Investor side, I think it's more coming from the trading side. I've been seeing watching the markets very intently last couple of weeks in the risk on rally, where you've had, some of the stocks go 50, 60, 70% up. Interesting moves to watch, interesting moves to trade, but I don't think most of the sectors are out of it. Some which have rallied make sense from the bottom. So agri, because they're not impacted, whether it's seed, fertilizers, probably even some of the chemical stocks. But, they've all rallied to a point where next what? There's nothing left on the upside. So if you look at fine chemicals, most of them are fully priced. And, these are the sectors where at least the fundamentals are supporting it. Rest of the economy is going to be in a shock state for at least 6 months. So if you're looking at, it's cheap, it's the fact is that the EPS is yet to register the fall. And I think post the June quarter results, a lot of, stepping down of the EPS numbers will take place further, and then we will really get the true value. I think from the long-term investor side, very few mid-caps have kind of kindled interest. From the trader side, I've seen a lot of play in and play outs, but I think we would still wait before we deploy money into the small cap side.
Right. Anu, before I let you go, if you could share some stock picks for the medium to long term, not a absolute short-term trades, any stocks which are looking good on the charts, which have potential in your view, not exactly buy or targets. I just want to understand which is looking positive and from all the three universe, mid cap, large cap and small caps.
Portfolios basically geared large cap right now. Mid caps and small caps are less. Mid caps, we are geared more towards the gas companies. So IGL, MGL, Gujarat Gas, those look good, not trading stocks, something you can hold for a year and a half too. On the basic switch that we've done is, which I think a lot of funds have done, reduce banking, get nil on NBFCs and probably add telecom in a big way. And in telecoms, we've got all the stocks which are there, which are all large caps practically, except for those need to be added. Probably the idea is that you get new sectors which perform in every new rally. And probably banking would, if not give up completely, would share the mantle of indices having higher weightage to telecom. So I think it's a very simple, straightforward strategy. There is no complexity out there.
Right. No, clearly, I mean, there is, it appears as if technicals, fundamentals and regulatory, everything is kind of converging to make strong case for telecom for sure. Thank you so much for your time, Anu, and always wonderful to chat with you on the show. Thank you very much. Take care and stay safe.